Today's soybeans were lower. The Chinese buying optimism has really faded. It sure looks like that the Chinese buying factor is over for 2018, and I think that some of the selling is coming in as traders kind of give up on any market movement right now, especially that we're looking at a government shutdown right now. All the focus is on that, so the idea that we're going to be working on the U.S.-China resolution seems to be kind of a moot point. And I think that traders are just like moving to the sidelines and just waiting. We probably will get a little bit more choppy trade on next week, but we're going to watch that closely. That's why today you saw the market sell off a little bit in soybeans, maybe about 8 or 9 cents. Corn was steady. It was the only one that actually looked pretty good. The export sales hit a new high, closing that gap yesterday. Really takes away that kind of burden right now, and it made a nice rebound today, up 3.5 cents. So now that we can start to see some real progress in corn, because we have had some decent demand, and I think that's why the corn never sold off. We couldn't get the rally that we were hoping for with the strong exports that we've had, but the market just staying steady is actually a good thing for that market. Wheat was down again. Russia raises its export forecast, just putting some serious pressure on the market. Maybe it did get overbought too much when we ran up to 537.5. Now we're quite a bit lower there. Today, the market really was down 10 or 12 cents. It just seems that the futures market is so thin that that the momentum kind of takes over in a big way, and so on the way down, it really pushed through its objective, and now we got a little bit oversold. And so maybe on Monday we expect that there could be a little bit more of a bounce. But that being said, that just means that there's going to be a lot of volatility through the end of the year. So we have a short week next week. It should be very interesting with all the grains, actually.